So this is actually begging the question now as to which would be really unthinkable some years ago as to what the role of the US dollar is going forward. I don't see it as an alternative to the US dollar. I see the US dollar continuing to be the choice of reserve currency. However, I think the euro will gain more significance. Yes, the Canadian dollar is the sixth most traded currency in the world, mainly because 70% of Canadian exports, as you know, David, go to the USA, one. And two, the fact is that it's a petrocurrency and it's important. We've lived through a number of crises. I would characterize this one as being most similar to the 1994 tequila crisis in Mexico, which was when the incoming Mexican government decided to devalue the Mexican peso by 15% overnight. Good idea, make Mexico more competitive, but it triggered a crisis in all South American currencies, which then became an emerging market crisis. So in other words, it was inflicted. And I will characterize what's happened in the past few weeks as an inflicted crisis, as opposed to the other ones we've lived through. And I'm not going to go through them all because there's too many. But 1987, the markets were concerned about rising interest rates. They were concerned about inflation, and markets were basically overcooked. And suddenly we had the 1987 crash. In 1992, the UK was struggling after Germany had put up its interest rates because of East Germany integration. And the UK currency, British pound, was struggling to stay in the bottom band of the ERM. And of course, as we all know, it didn't and fell out. Now, these were all market-influenced events, as was the 1997 Asia crisis, where the Central Bank of Thailand was trying to defend the peg of the Thai baht against US dollar. And that didn't go well at all. They expended lots of their reserves, threw in the towel, and then that triggered a wave of currency crises in Asia. So there's some examples. But I mean, another one would be the dot-com crisis of 2001. And people think, well, okay, it was overcooked dot-com stocks. Well, it was, but it was exacerbated by the WorldCom and also the Enron financial scandals. And then, of course, the tragedy of 9/11 and the World Trade Center meant that markets were then frozen, and we had the crisis in 2001. Now, all these things were when markets actually dictated the running. Whereas in this case, and I'm getting to it, in this case, what's happened here is that it's been targeted by geography. Trump has targeted China, Mexico, Canada, and the EU. He's targeted industries, aluminium and steel, to try and protect US industries. And some of the things were completely predictable, such as volatility, a flight to quality. But this is where it gets interesting, because this time the flight to quality, when the dollar should have gone up, the dollar went down. The flight to quality should have gone into US treasuries, which meant yields should have fallen, and they went up. So this is actually begging the question now as to which would be really unthinkable some years ago as to what the role of the US dollar is going forward. And I don't think we want to over-dramatize it, but the point is it's begged the question. It's forced people to start thinking about it. And what we call the convenience premium or the privilege premium, which is the US's right to issue debt and for investors to believe that their money is going to be safe and they will always have liquidity, that was brought into the limelight fair and square in April this year.
In headlines, wasn't it?
Yeah.
Can I just elaborate on what you said? Because one of the things I wanted to ask you is that you talked about the 1999, 2000, 2001 crash, tech crash. But the Neuer market completely wiped out in Germany. Totally, wasn't it? I think I'm right in saying. Also, what I found fascinating and interesting is that neither of you were probably even a twinkle in your father's eye back in 1963 when the pound devalued, when Wilson and Callaghan were there. Then we had no what I call serious communication, no Bloomberg, no Telerate, no Reuters, nothing to speak of. Today, we have got the most educated audience in foreign exchange or any market than you could possibly ever have. You've also got a greater level of liquidity. And to just touch on the point, you talked about flight to quality, Humph, gold and crypto. I mean, gold now plays a serious role, I think. And crypto, which we're not going to get involved in, but a lot of people have felt, hell's bells, there's a limited number of coins in issuance. It's going to be safe in the long term, whether they're right or wrong. Just elaborate a little bit on that, if you would, not necessarily the crypto, but the rest of it.
Yes, well, I mean, normally gold is a very good hedge for falling dollar. So that covers that. Yeah. And of course, gold is the sort of benchmark for market sentiment. So we know all that, and there's an industrial use, there's intrinsic value, and therefore it's a very important price and commodity to watch, as is oil. Now, oil, of course, apart from the obvious, which is that you basically got the oil exporters and the oil importers. And the oil importers, and this is particularly significant, are in no particular order Japan, India, and large parts of the EU. In theory, the euro should be the sort of the obvious
second-tier reserve currency.
Yes,
yeah.
And I don't see it as an alternative to the US dollar. I see the US dollar continuing to be the choice of reserve currency. However, I think the euro will gain more significance, but it will only gain significance if the EU do some quite fundamental things to the financial architecture. So, for example, we don't have an EU capital market. We've had some cooperation on Ukraine, on weapons, on COVID, but there is not a depth of industry. There's not a EU treasury market as we understand it. We've got 27 different jurisdictions. We've got 27 insolvency laws. Yeah. So we don't have a consistent, and the classic, I think it was Henry Kissinger in 1973 said, "Who do I call when I speak to Europe? Who do I call?" Now, we all know actually the answer is Ursula von der Leyen, but that's the answer now. But does she speak for all of Europe? No. Do we have deep capital markets? No. Does the ECB have these swap arrangements I was talking about earlier with all the other central banks to allow them to intervene and to be basically market maker to all those central banks? No. So actually, there's quite a lot of things that have got to be done before the euro can become another dollar.
Hence my question at the time, is the euro really in a position to attract money that is surplus to requirement for those who've previously owned dollars? And I think you've explained it well, because there is a degree of stability, but there are, as you say, a significant number of unanswered questions.
There are.
How do you see the role of central banks within all this then? I mean, you've said that there are occasional arrangements within the EU, but what do other central banks, what should they be doing? What do you see them doing?
Well, central banks still play a role in managing currencies through their traditional monetary policy. So interest rate policy, targeting inflation, FX intervention. Not that often, but I suppose the best known proponent recently that everyone knows about is the Bank of Japan intervening in dollar yen when the yen weakened quite sizably last year to over 150, and the Bank of Japan played a very good hand.